Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a tech stock that has undergone a correction in the last few weeks, actually months. That correction was expected, but it is quite deep. It is quite deep, so we want to take a look at the chart. Let's go. So yeah, we are taking a look at the PayPal chart today and we want to navigate to our tech stocks section. We select the PayPal chart and yeah, we'll take a look at the shorter time frame. We'll take a look at the longer time frame. First of all, let's take a look at the larger time frame for PayPal, and you can see that we are interpreting this initial rally that unfolded here into the 2021 highs. That's a 5-wave move up. So there is a chance that the price is in a long-term uptrend. I think the 5-wave move up is fairly clear. The move down, which we interpret as a 3-wave move down, I've always said it's not a very clear. The AB pattern is a bit small, the C wave is very extended, and actually ideally a low formed in October 2023, at least if we want a cleaner structure. Now, latest price action suggests we could potentially break below that $50 level there. The critical level here on the larger time frame, we also see it on the smaller time frame. So that is a bit concerning. It means that maybe this larger degree wave 2, which what we assumed before, that potentially bottomed in October 23, it might still be unfolding. At least latest price action suggests that. Now, nothing is invalidated yet, so we want to take a look at that. Long term, I mean, we see this chart potentially reach like, $500, $600, $700 plus. But this is really long term. For now, we are, and maybe even higher, right? But for now, we are only navigating the previous lows. So we don't want to focus too much on long-term targets. Just want to highlight the potential here. And a third wave is typically the most aggressive rally. Now, there was a case to be made, and there still is, that potentially a larger degree third wave has already started. If in October 23, a wave 2 bottomed of a larger degree. The problem is this move to the upside kind of looked more like a 3-wave move up. We can still say that this here is potentially some kind of a 1-2 setup. The recent low here, or at least as long as we're holding above this $51 level, this here could be a wave 2 pullback, and then a third wave rally could start, but that would require more evidence, right? We would need to see a surge in upside momentum from the current price region. I don't see it at this point. While I record this video, there's a bit of a bounce, but it's not strong enough to indicate really that the bulls are taking the lead. It is not third wave to the upside quality yet, and that is a bit disappointing because this chart looked quite promising. It also always was a 3-wave move up only, so it was not a 5-wave move that we saw from the lows in 2023. That always keeps us on our toes. Yeah, that's why we are so careful in tracking really the wave structures, because when we don't see a clear impulse from the lows, but only a 3-wave move, and that could even be a 1-2-1-2 setup. I mean, a 1-2-1, there's also 3 waves. So until we really get a clean 5-wave move up on a relevant time frame, the trend reversal is always very fragile. But the price could still, if the bulls turn up now, they could still, let's say, save the bullish scenario. And we need to turn around to the upside before the price breaks below the October 23 low for anything immediately bullish. Any break below it means we have to take a step back. We could still see the larger degree time frame, the larger trend as bullish, but it would invalidate a local reversal attempt. That is definitely a warning, and it would mean we don't have anything immediately bullish left on this chart. I think that would be a concern because it could also mean there's no guarantee then that the price will turn around. It should do at some point, but it opens the door to a much larger correction. So for now, that $51 level is also a bit of a psychological level, $50. That acts as a line in the sand, I would say, as a pivot between potentially bullish momentum and bearish momentum. But as you can see here on the chart, we only really see it as alternative that a low has already formed in October 2023. So unless really there's, let's say, a surprise turnaround, a third wave rally is likely delayed, okay, and we will have to wait until the price generates a new upside reversal pattern from a lower base. So for now, it means be on the side of caution here, no upside trend reversal. We also haven't provided any, let's say, trading area here intentionally. There was one here before that was grayed out, so good performance from down here. Maybe the market will make another turnaround, but we see the current price action as, let's say, higher risk, okay, and probabilities for a turnaround are lower than they were back then. So that's the update about PayPal. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on our website and you get access to all of these Elliott Wave updates completely for free. And yeah, hope you join, and also let me know in the comments which other tech stocks or cryptos you want me to cover in future videos. Thank you very much. Bye-bye.